So hello and welcome to a special video update of Fortune and Freedom. Today we're going to be hearing from Dr. Xiaolin Chen, Head of International at ETF provider KraneShares, all about China. Now, of course, China matters. It's the world's second largest economy, an important source of global demand, has rising diplomatic influence. As a global investor, whether in the UK or elsewhere, even if you choose not to invest directly in Chinese companies, you can't ignore the country because without understanding China, it's hard to understand the world, really, certainly as an investor. So, Xiaolin, now there's a lot to talk about today and not that much time. So let's start off with the recent stimulus package announced by China recently. It seemed to disappoint investors somewhat. What was your take on it?
Thank you, James, for having me on your show. Obviously, this long-awaited policy bazooka, if you may call them, has been, in this big, large scale, has been weighted by the market nearly a couple of quarters. I have to say, Chinese government has been doing very segmented or targeted measure over the last 7 quarters. This time around, obviously, they announced a massive stimulus around how equity swap program going to be implemented. That's 500 billion. How mortgage, they have been helping the mortgage, helping the real estate market for some quarters by now. This time around is almost a direct immediate injection of liquidity to household. What do I mean by that is this policy will immediately benefited 50 million household with 150 billion renminbi interest less paid by them with immediate effect. So market really welcome the policy in that way, say, wow, this is immediate availability of disposable income to household to help on the consumption side. Every policy centered around announced by the Chinese government is to try to help the consumer. So they felt like they tick the boxes. Market did rally on back of that because the scale, because also the other thing is the tone of how the governors from PBOC, which is Central Bank of China, has been announcing this policy. He was like, 500 billion, is it enough? If not, we have another round of 500 billion. If not, we have another round of 500 billion. James, those kind of tones of me following China market for 2 decades is unprecedented. Okay, so that's why market is a little bit of like, really get excited. Then later on, get a little of a correction was really market wants from the high to another high. Okay, the Chinese government is managing the tone, the progress, and how market reacting to these policies. I read a social notes from the domestic market in China was saying they want a bull market, but they don't want a crazy bull market to run all the way up. Yep. They want an orderly bull market. So you probably have a bit of a gradual policy announcement from here.
Okay, so some analysts were saying the emphasis was on more stabilization rather than stimulus. What was your take? What's your take on that? And in terms of investors in the UK or elsewhere, how should they read this? Is this now a good time to go into China?
Great question. The answer is yes and no. So it is for stabilizing for certain market. Is a no. For some market, they really want a huge boost. For the stabilizing, which the yes part is real estate. They really want to stabilizing real estate from here. If any investors who watching this video are saying, the golden time of China's real estate market is returning, is absolutely not. That's a misunderstanding, a wrong expectation. Real estate market in China will stabilize from here after nearly 2.5 years of a correction in price, in inventory, in new builds, in the real estate developer. All of that is settling down. I'm a bear on real estate market. I declare that. But I do say after all these years of the correction in price, inventory clear up, the bad apple gets squeezed out, you start to see stabilization of housing price, lower mortgage rates, less inventory, and then the activity in the primary and secondary start to pick up. So that's the yes part of stabilization. The no part is everything they do is to say, I'm not going to give you, helicopter money to the household, but I'm going to help you to reduce your cost. Okay, and give you a better job. So in that instance, I would call them, this kind of scenario is a stimulus to help the household, like the mortgage we mentioned early on. And second is the physical expansions that they're going to spend more money to get people to have a better job, better income, also helping the household. So they are doing stimulus, but slightly different measure like we've seen in Europe. I do say, from everything they announced, it does feel like a marrow drug in Europe, in our world, to say we do whatever it takes for Europe back on track. This is China's moment of they do whatever it takes for the economy to be back on track.
Right, got you. And commodities. I mean, it seems like the prices of iron ore, commodity, copper, materials used in construction, they all sort of declined in the aftermath of the fiscal package. We've seen China. There's been a developing sort of property market crisis dragging on now for a little bit. What's your outlook for commodities?
Commodity will be, obviously from China, it would a bit of a slightly lagger. So first round is stabilizing real estate market, encourage the real estate developer to come forward because there's funding available from the central government to borrow the money, kick off the activity. The new inventories, the new bill to complete are still at very low level. When that starts to pick up, you only needed the next level, which is the commodity demand to pick up. But obviously at this level, they still have very low inventory, very low level of new projects to kick off. I do think, okay, though I'm a bear, but Chinese real estate market is not go down to the pipe, okay? It will stabilizing from here. James, that's good enough for middle class of 870 million people who is living in city. Real estate market will not go down. Real market will stabilizing here. Even if it's stabilizing from here, commodity market would be actually enough catalyst for commodity markets to be positive from here.
Excellent. Okay, so the other big talking point in over the last week, I guess, is Trump. Trump regaining the U.S. presidency. Chinese assets sold off after the Trump 2.0 outcome. Obvious question: will Trump and his tariffs be bad news for China?
Good question. Another great question. I always think even with China or U.S. China, or even with any two parts, the tariff is always a double-edged sword. You would agree with me, right? Because a lot of Chinese companies export to U.S., so is vice versa. The U.S. consumer is benefiting from such. I think if increasing tariff on Chinese corporates is one way or the other also hurting U.S. domestic consumer or U.S. corporates. You already see a lot of people making a noise to say this is not going to work out as the way you would be ideally hope for. That's one. So we got to wait and see how that policy is going to roll out. A lot of things you announced during your election process to the actual implementation, there's going to be discrepancy. That's one. Second, this is his second term, and that's it. Okay, if history is any guide, you would look for to set up your legacy. Okay, so hopefully this is where he would be more constructive work together, setting a lead by example. At the end of the day, a lot of the corporates in China, outside of China, in Europe, they look to US as a benchmark where they're going to follow in practice as a capital markets as well. So hopefully that second term going to change his way of managing the country. Third, people around him. This time around, I actually have more confidence. He himself is a business person who is around him. For instance, Elon Musk. He gave him a huge appraisal during his winning speech. I think Elon also have a lot of common in agreement with Trump is we are business person. We get deal done. We get business done. If that is the case, James, it's a not bad candidate for China. If there's a path for us to work towards an agreement, it maybe turns out to be not too bad. And then I also say Elon Musk Tesla has 30% of revenue from China. I hope there's some positive, constructive music to Trump's year to say at the end of the day, what policy we're going to implement, really to introduce and implement, is going to be a win-win situation for both.
Got you. So I think, do you think, so I guess that 60% tariff call, do you think that's a starting point for negotiations rather than a sort of set in stone number?
I think any policy he introduced, you're absolutely right, is only just a announcement there, but this is a starting point. It's actually, if you look at his first term during Trump's administration, U.S. and China traded the most in record.
Yeah.
So
really.
Hopefully this will be a path to actually work together.
Do you think a Trump presidency, do you think that will mean a greater chance of a big shot of fiscal stimulus in China down the road?
I somehow feel like if China could announce a bit more domestic focused policy, i.e. helping the household even more, helping the consumption even more, those kind of step forward would actually counter a little bit of potential headwinds or, headline news from US and China, tariff talk and so on and so forth. I do think China has those working in progress. If you listen to the conference, they did a press conference after the NPC meeting, saying there's a lot of policies still working in progress to get approved. So hopefully, fingers crossed, before year end, we get more color on consumer and consumption policy supports.
Okay, sure. So we're nearing the end of 2024 now. What's your general market outlook for next year and beyond for any investors looking to get into China?
I think at the end of the day, if you take a step back, this is really the second largest economy in the world. We all know the economic importances. Given where the allocation is in China across clients' portfolio, regardless of your mandate, is one uniform theme: underweight. Okay, a lot of investors are using, mutual funds, active manager as a benchmark. Active manager are underweight China, has been underweight China for a very, very long period of time. And then a lot of people now choosing to use ETF to be more nimble to express their allocation. Overall, they're still underweight. This is not a crowded trade. Valuation is decade low, and the corporate fundamentals actually are very much improving. Okay, this week will be quite important to see some of the top, tech companies or e-commerce companies in China start to release their earnings, so on and so forth. You're going to get good numbers from those companies. If macro environment become more accommodative, which couldn't be more confirmed by the Chinese policymaker, we are, supporting the economy. Fundamental is improving. Valuation decade low. Allocations are decade low. This is probably a trade worthwhile to take a look to say, you know what, where I have been at overweight, where I have been hugely outperformed the broader market, it is a time to rebalance a bit, to look at diversification. Because if China just focus there domestically enough, in 2025, you're going to see a huge pickup from all the policy introduced this year to next year, you're going to start to see effect.
That sounds reasonably sort of bullish, I guess. Yeah. So, therefore, then, how should investors position themselves? What's the way they should best sort of gain exposure now to China?
Great question. The first round of the rally is broader beta. Everything you own is ready. Now is a staging two. The staging two is to start to differentiate which sector, which company going to lead more. Because you want to say, you know what, I've been underweight in China. If China rally, I want to have more upside. You rally 10, I want to be more beta than that. So in this instance, you got to see two things. One, which sector are the policies targeted to help on consumer? So all the e-commerce names, for instance, our flagship of KWEB fund is expressing a person in China spend 100 RMB, whatever the amount, 100 RMB, that transaction happened in the ecosystem, you benefit from that transaction. So that's KWEB benefiting. So consumer will have to lead. Today, consumption is 40% China's GDP. China aimed that to be double in a decade. So they will have to support those to make sure they continue to be in that way. And also, those names get most sell-off because of the macro news. Now the macro news turning positive. These are the companies actually have the most upside. So I'd say consumer-related e-commerce, like a KWEB-related strategy, will outperform.
Right. So you maybe for our watchers and listeners who are unaware of some of the options that KraneShares provides, maybe you could you run through those as well?
Absolutely. So our fund ticker is called KWEB. The fund is available in the United States with the same ticker. The fund also available in UCITS, in Europe version, which is exactly with the same ticker, but locally listed UCITS funds. We have in Europe in dollar, in US dollar currency, in euro currency, in sterling currency. It's available on LSE, Italian exchange, and German exchange to ease investors trading. All of the US or UCITS funds are managed exactly the same way. Okay, so investors buying the funds is really to which regulation you need to follow. Okay, if UCITS is US, they are actually managed exactly the same way, but just in different currency, different time zone.
And you said there is an option for sterling denominated as well.
Correct. Right? It's it's KWEB in pound. It's on LSE, traded in sterling in GBP.
Excellent. I've got to ask you, I do a lot of work in clean energy. That's my main body of focus, I guess. And obviously, most watchers will know that China is home to some of the world's leading renewable battery technology companies. It's at the forefront in many ways of the green energy transition. In fact, you could argue that some net zero might only be possible if China plays a leading role, I guess.
Correct.
What are the sort of industries affected by the recent announcements by the NPC and also, I guess, the new Trump presidency? How are things shaping up now in terms of the green energy transition and those big green companies in China?
China is going full speed ahead in clean space, period, the end. In electrical vehicle, in solar, to internationalizing their companies' footprints outside of China. That is still happening. And James, I'm glad you asked this question. This year in 2024, it was the first time I went back to China after pandemic, and I went back 3 times. In March, June, in August. All 3 times I met with BYD, NIO, Li Auto. I also want to see quite a few solar companies as well. Obviously, I am super impressed. Not being Chinese and biased, I've seen it in my own eyes. How the quality of their electrical vehicle made in China, how cheap the cost is. I literally brought a group of my classmates from Cambridge University to take them to Shenzhen to see it themselves. How, the made and the make factor. By the way, Shenzhen today is pretty much 70, 80, if not 90% EV. That's the penetration. Wow. And in Wuhan, which is my husband's hometown, we went there to see our, my son's grannies. They have already in city center allowing a robo-taxi to run for real. We are behind again. Okay, you can order just like you order Uber. They have their own app in China. You order a robot taxi. I literally tried them. Okay, first thing you get on is I feel like a little awkward. No one there. It's completely autonomous driving. You sit in there. You get your destination. They drive through. The technology is unseen anywhere else. It's happening in real busy city center. You know how many people, how many vehicles, cars on the road in China. It runs smoothly. And also very, cheap, cost efficient, so on and so forth. So China is going full speed ahead, even just domestically, to increase their EV adoption rates. Today is around 50%. They really want to even adopt them even more quicker. The new car sales is 50% are EV. So they want to aim even higher. Even in tier 2, tier 3 city, like Harbin is a northern east city, very much northeast. They have already started. All the public transportation are EV. So if they really focus just domestically, it's enough for them to work on, the production they have EV. But I really hope, as a consumer, those EV cars made in China with high quality, cheap cars, made available here, right? We are a consumer. Xiaomi is a company known for their phone making, but they also entered the EV market. They introduced a brilliant EV a few months ago. Look fantastically, really, really posh look. And they sold, it felt like a bit like a posh, look. Kind of really the posh German brand of car look alike. They sell them at £24,000.
Is that right, really?
Exactly. Where the same one in UK, probably 100K to start. That's the difference. Right. So we as a consumer get disadvantaged to not get access to that. If I have a choice of that, I probably buy that. But we don't have that choice. But that is going forward with their developments. And also they are very much advanced in the smart app. In the phone, EV is really a smart vehicle than just electrical vehicle. They are advancing or leading in software development. In clean technology, clean energy. In June, I attended Summer Davos in Dalian, where Premier Li was there, and then he gave a very about 20 minutes together with Poland's Prime Minister and Vietnam Prime Minister, 3 of them on the stage. Each had 20 minutes. There he said one thing I remember very clearly. He says government will do whatever it takes for these industries in China to become trillions of dollars worth. First one is clean technology.
Is that right, really?
Yes, that's what he said openly, publicly. He says clean technology must be the first. And then, of course, consumptions and then healthcare because of the aging population, so on and so forth. So those 3 industries, he wants China's companies in those industries to become trillions of dollars worth company. So you can see, I think the supports on those companies are continue to help them to advance and lead. Today, 95% the solar panel are produced in China. And I think a lot of European investors are using them. Those, I think, is benefiting for us. So I'd say we should work together to get more of the technology shared globally for us to collectively achieve that carbon goal.
So this is all, from an investor's perspective, this is all incredibly exciting. But obviously, accessing some of these Chinese renewable companies isn't the easiest generally. If you're going to try and stock pick certain companies, not always straightforward. And that's why the ETF you provide, KGRN, is actually really interesting. It's now UCITS compliant. I've had a bit of history with this ETF. I know it's actually had a really good last few months, I guess. And I presume you're thinking sort of even better times are ahead.
I agree. For Green, KGRN is exactly expressing the clean technology, clean energy space. So if you are in alternative energy, alternative space, hydrogen technology, all of those names from China, regardless where you list from China, those are expressed in that fund. We also have another strategy called CARS, KARS. All these strategies same with the taker that is available in US, available in UCITS. Cars is a global theme of electrical vehicle. Obviously have about 35% to China because the dominant player from China. But the rest of the 65% are from the rest of the world. To be fair to say, expressing the electrical vehicle industry. But what differentiated our fund in cars to others is we have the entire ecosystems. From A to Z, not just the car maker themselves, but some metals used, some company producing those rare metals to support the EV. Some of the software application companies only, support the EV's application in the car, so on and so forth. So we have the entire ecosystems of cars, theme in that one fund. So both funds are expressing the theme of the clean and the carbon climate.
Superb. That's for investors. They sound both, if you want to get exposure to what's happening in China and clean energy, cars. These sounds fantastic options. Just quickly, just being more sort of general now, I guess. What other catalysts in China aren't yet sort of priced into markets? Would you say, just to sort of round off here?
Very, very good question. Because first, a lot of people say, "Oh, that's it, policy." No, there's more to come. December, you're going to have a working, economic working group, which is December. That will be particularly focused on how is the economy do this year. What should we focus on? What we need to do more. So that's December is happening. And we should expect more policy to be announced in subsequent weeks because of a lot of work happening. So on policy front, there's still a lot more to expect. That's one. And second, a normalized capital or equity market is not in the market. I give you an example. In June, when I met with Bonnie, she is the CEO of Hong Kong Stock Exchange. She was on the same panel with John Crane, who's our CEO. We met her and then we chatted and she said, "Listen, Xiaolin, we have 110 applications ready to go as IPO in Hong Kong." She said, "My counterpart in Shanghai has 80 applications ready to go to IPO." That is June's data, James. With 4 months later, there's going to be more. Imagine new IPOs, new market, new stocks start to come to market. That's a bit of a normalizing of the capital markets to happen. That is not in the market yet. That's not even priced in. And the second thing is, when I had the pleasure to meet with Lazard is the logistic company of Alibaba. Remember Alibaba saying we do 1+N? One of our parents and the other 6 will go IPO yourself. Lazard is one of them. I met with their general manager. They showed us their business model, how they manage, rotate, different parcels just in one warehouse. Then he says, "Listen, this is our financial statement." I was like, "James," "why didn't you go IPO? Like, you ready?" And he was like, "If our parent company Alibaba get unfairly valued, we don't want to go IPO. We will wait right moment to go IPO."
Right.
So which is understandable. None of that is pressing in the market. The new IPO and those good companies to go IPO. And then the other one, and then we'll pause there, is the company themselves sees value in their own company, saying, "Hey, my valuation is really low and unfair. My growth potential is really great," and then you don't believe it. Then the investor says, "Sure, buy your own stock." And all these companies that, for instance, in KWAP, top 10 of them, top 10 holdings of the stocks in KWAP fund are all announcing a share repurchasing program. Give you an example. Alibaba has announced over quarter. Thus far at this point in time, cut off at this point in time, when they completed all the share repurchasing, Alibaba will reduce their share outstanding by 14%.
Is that right? Wow.
So they say, "I believe in my own stock. We'll do well. This valuation is not right. So we believe in our own company. What we do is we give you some dividend back. The rest of the money, we keep it, buy the shares back." So now they have already implemented part of it. Okay, when they will not tell you when they execute, but once they've done it, they announce it. Once they've done it, announce it. But they already tell the investor, "We're going to buy back altogether 14%.
So these buybacks are happening across the board generally, are they?
Correct. Particularly those names are in e-commerce. Remember when you asked me which theme will outperform, where should I allocate? I say consumer, because for a very clear reason, they really get smashed macroly from top down disregards their fundamental was really strong. Those macro stock, driven their performance. So the company was like, listen, our condition was good. Companies are get supported by the government, and our earnings are good. Our valuation is way too cheap, and market not listening, right? Because any macro news is bad news. They say, fine, we buy our own stocks back. So this is happening as we speak.
Excellent. That's so fascinating. Anything else you'd like to add before we wrap up, Xiaolin?
I just say lastly, this is an asset class, a lot of topics going on. So you can read the media, but try to connect the dots yourself if you can. Listen to different channels and so on and so forth. For instance, here, got to be based on the fact. Because if you just listen certain medias on headline news, you just always have the one side of the story. The fact is a lot of things is they speak different languages, they're on different time zone, the culture, the way they do things is all different. Find a different way to balance the tone, understand if things doesn't make sense to you, then they probably is not right. Okay, so find a balanced tone of research to understand this class. This is such an important asset class that is only merely a small allocation in any client's portfolio. This will change in a dramatic way.
Fantastic. That all spells sort of good news, I guess, for UK investors. Obviously, they can get a large portion of their news and updates from us here at Southbank Investment Research. Xiaolin, thanks so much for your time today. That was fascinating. Anyone watching, I hope you enjoyed that. Obviously, the team at Southbank, specifically in this case, Fortune and Freedom, will be keeping a close eye on China in the weeks and months ahead. There's lots been happening. So stay tuned for further updates. And thanks for watching.